Hey people, I welcome you to Caroline's Online Academy. This is the third video in the series where I am helping you solve the issue of debentures for consideration other than cash problems asked in the examination. Okay. Here we have a question from compartment. It is Venus Limited is a real estate company. To discharge its corporate social responsibility, it is decided to construct a night shelter for the homeless. The company took over the assets of 10 lakhs and liabilities of 1 lakh 80,000 of Keynes Limited for rupees 7 lakh 60,000. So in this question, they have given the purchase consideration, and that is 7 lakh 60,000. So there is a possibility of us getting capital reserve or goodwill. Venus Limited issued 9% debentures of 100 each at a discount of 5% in full satisfaction of the purchase consideration in favor of Keynes Limited. Pass necessary journal entries in the books of Venus Limited for the above transactions. So let's get this ready for passing journal entries. Sorry, I didn't get it ready before the start of the video. Won't take much time. All right. The first journal entry is making the purchase consideration due and taking over the assets and liabilities. Am I right, my dear children? So it will be assets are coming into the business, so asset account will be debited, and liabilities are coming into the business, so liabilities account will be credited. So it will be assets account debit with the agreed amount of assets taken over. It's 10 lakhs. To liabilities account credit with the agreed amount of liabilities taken over, which is 1 lakh 80,000. To Keynes Limited, the vendor from whom we are buying the assets and liabilities, to Keynes Limited account, because we have to pay them now. And therefore, a liability is increasing. Therefore, we're crediting them for 7,60,000. Now, if you compare the net assets with the purchase consideration of 7,60,000, you get what? What are the net assets? 10 lakh minus 1 lakh 80,000, which is 8 lakh 20,000. And you compare the purchase consideration is 7 lakh 60,000. So for purchase consideration of 7 lakh 60,000, you're paying net assets, you're getting net assets worth 8 lakh 20,000. Net assets purchase consideration. So actually gain for you, right? You're only paying 7 lakh 60, but you're getting 8 lakh 20, right? So purchase consideration. Therefore, if your gain is 8 lakh 20 minus 7 lakh 60, which is 60,000, and that will be credited to capital reserve. What if you paid more than the net asset you got? Then the difference will be debited to goodwill account. Understood, my dear children? Understood or not? So that is our first journal entry, making due. Either Olinga Potale, you might get 1.5 marks. It's a 3-mark question. Assets and liabilities taken over. And the second entry will be paying assets and liabilities. Now, how are we going to pay them? We're going to pay them by issuing 9% debentures of 100 each at a discount of 5% in full satisfaction of the purchase consideration. So we're going to be issuing debentures at a discount. Payment entry, first, we are supposed to debit the vendor who's going to get paid, and therefore his liability is reducing, and therefore we'll debit him. And before we make the debit or credit the other accounts, we need to calculate the number of debentures. Calculation of the number of debentures issued. This is only necessary when the debentures are issued at a premium or at a discount. Okay. So the calculation is very simple. You just have to write the purchase consideration that you have to pay. In this case, it is 7,60,000. And then you divide it with the issue price of the debenture. We're issuing 100%, 100 rupee debentures at a discount of 5%. So issue price of one debenture will be 95. And therefore the number of debentures issued will be 7,60,000 divided by 95, which is 8,000. So you're issuing 8,000 debentures at a discount. Whenever you issue debentures at a discount, loss on issue of debentures account will be debited. Understood, my dear children? The loss on issue of debentures account will be debited, and 9% debentures account will be credited. As I have already mentioned earlier, 9% debentures account will be credited with the face value of the debentures issued. Face value of the debentures in this case is 800 rupees, right? So 100 into 8,000 debentures is 8 lakh rupees. And the loss on issue of debentures can be found out, as it is a balancing figure or in the journal, or you can also calculate the loss itself. You issued 8,000 debentures, right? And 5 rupees is the loss per debenture, right? And therefore, it is 40,000. Loss on, I'm sorry, debentures allotted. So does the sum get over here? No. Whenever there is loss on issue of debentures, you got to transfer it to either securities premium reserve or a securities premium account, or you got to transfer it to statement of profit and loss account. When will you transfer it to securities premium? If there is securities premium, you will transfer it to securities premium. In this case, we don't have securities premium, so we'll transfer the loss to statement of profit and loss, profit and loss account, debit to loss on issue of debentures. So that will be 40,000, my dear children. Loss transferred to P&L account. All right, children. So we move on to another question. I want to do another question which is with the redemption value, and there should be bank draft or something like that. Yeah, here we have LT Limited. Good. This is a nice question. It covers everything that I want to teach you in a comprehensive question. LT Limited purchased land from JSS Limited. The payment was made by issuing check of rupees 10 lakh and by accepting a bill of exchange for 6 months for rupees 5 lakh. The balance amount was paid by issuing 5,000 10% debentures of rupees 100 each at par, redeemable at 10% premium after 3 years. Pass the necessary journal entries in the books of LT Limited for the above transactions. Children, this is a very beautiful question. They have not given the value of the asset purchase. See, they've given it indirectly. The first journal entry is what? Assets and liabilities taken over, right? So if you have to pass the first journal entry, it will be assets taken over account debit and liabilities taken over account credit. In this case, LT Limited purchased a land from JS Limited. So they just taken over an asset. So that will be land account debit. They've not taken over any liabilities, and so liabilities account will not be credited. But they've taken over the land from whom? The vendor, JSS Limited. So to JSS Limited account. JSS Limited account will be credited. Land purchased. But have they given for how much they purchased the land? No, they have not given that. Directly, they have not given that. But they've given it indirectly. How have they given it? The payment was made by issuing a check for rupees 10 lakh and by accepting a bill of exchange for 6 months for rupees 5 lakh and balance amount by issuing 5,000 debentures of 100 each at par, redeemable at 10% premium thereafter. So, my dear children, what they have done is they've given the total amount of money paid, and when they have not mentioned the net assets amount, and if they're giving the total amount of money paid, then that is actually your purchase consideration. Understood? And the net assets taken over. Okay. So payment was made by check. So through bank, we paid 10 lakh rupees. And the balance amount was, and we accepted a bills of exchange. So bills payable were accepted for 5 lakh rupees. And the balance amount was paid by issuing 5,000 10% debentures of 100 each at par, redeemable at a premium of 10%. We are not bothered about the redemption value. We are bothered when we pass the journal entry for issue of debentures, but we're not bothered about it to calculate the amount of money paid by us. As far as we are concerned, we have issued debentures worth rupees 100 each at par, and therefore we have issued and 5,000 debentures of 100 each at par, and therefore we have, as far as we are concerned, we have paid 5 lakh rupees. Understood? So as debentures, we have incurred liability of 5 lakh. So the total purchase consideration paid for the land is 20 lakh rupees. Understood, my dear children? So land account will be debited by 20 lakh, and KSS Limited account will be credited by 20 lakhs. And the next journal entry is payment of the purchase consideration. Just pay attention, my dear children. It's very simple. So JSS Limited account will be debited. JSS Limited account debited. We are redeeming the debentures at premium. திருப்பி கொடுக்கும்போது நம்ம பிரீமியம்ல redeem பண்றோம் அப்படின்னா we are incurring a loss. Am I right, my dear children? 100 rupee debentures we are redeeming at premium, then we are incurring a loss. Therefore, there will be loss on issue of debentures. Debit to how many percent debentures? I think it was 10% debentures. Yeah, 10% debentures. 10% debentures account. I told you the debentures account will always be credited to the face value of debentures. So that is 5,000 debentures of 100 each, and therefore it will be 5 lakh. And the premium on redemption of debentures will be credited when we are going to redeem the premium debentures at premium. Premium on redemption of debentures account. How much was that, my dear children? We are going to redeem it at 10% premium. So for one debenture, we're going to give 10 rupees extra, 10% extra, right? So that will be 50,000. 50,000 into 10, 50,000. JSS Limited is always debited with the amount made due in the first journal entry, and the loss can be arrived at as the. Oh, no, 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 no. We also paid through check, right? So that will also come. So to bank account, 10 lakh, and we also accepted a bills of exchange, right? So that's another liability. So that will be to bills payable account, 5 lakh. Understood, my dear children? And the loss of debentures account can be the balancing figure or just the 50,000. It's 10 rupees loss per debenture, and we have issued 5,000 debentures. So 10 into 5,000 is 50. Okay, purchase consideration settled. There's one more thing that I want to teach you, my dear children. The problem is not over yet. Whenever there is loss on issue of debentures, you got to transfer it to either securities premium account, or you got to transfer it to P&L loss on statement of profit and loss account, right? So in this case, we don't have any securities premium, and the question also does not say that it has any securities premium, and therefore we're going to transfer it to statement of profit and loss account. Statement of profit and loss account debit to loss on issue of debentures account. And that will be how much, my dear children? 50,000. Loss transferred to statement of profit and loss. That's it. Very simple, my dear children. I'm moving on to the next question. For want of time, if you want, you can rewind and watch this again. ABC Limited purchased assets of 4,20,000 to core liabilities of 40,000 of XYZ at a value of 3,60,000. ABC Limited issued 10% debentures of 100 each at a discount of 10% and full settlement of the consideration. We've actually solved questions like this, so I'm not going to do this question. It's very easy. You can do it by yourself. I'm going to see if there is some question that is worthy of doing. I've actually covered everything that I have to teach you in the three videos that I had prepared in this playlist. So everything has been covered. In case you have any question that needs to be solved or you have some doubts, kindly comment and I will solve that question for you and I'll add it to this playlist. Hope you people are having fun. Study hard, empty your mind, focus, you can win. Okay. Thank you. All the best. Bye-bye.